your next Social Security payment might not arrive, not because you did anything wrong, not because of a penalty or an audit, because starting this April, the SSA changed how it manages benefits. And if you don't have an active online account, you can no longer update your direct deposit by phone, no longer walk into a field office, no longer reach a human being in any reliable way. The payment keeps going to wherever it was last directed. If that account is closed, the money disappears into a return cycle that takes weeks to resolve. If you've been putting off setting up the online account because it seemed unnecessary, because the system always handled itself before, that feeling is exactly what this transition was designed to exploit, not maliciously, just structurally. The system moved. Nobody sent you a certified letter explaining what that meant for the check you depend on. Think about what that means in a real life. A woman I'll call Patricia, 64, retired school teacher from rural Tennessee, organized, not a technophobe, had a smartphone and an email address. Went through exactly this in February. Her credit union merged and closed. Tens of thousands of people across rural states faced the same thing that year. She needed to update her direct deposit. She called the SSA. She waited 2.5 hours. The representative told her the change now had to go through the online portal for identity verification. Patricia had never set one up. She'd never needed to. The system had come to her, by mail, by phone, by a field office 40 minutes from her home. The rep told her verification takes 24 to 48 hours once she starts the process. Her payment date was 4 days out. That gap, between when the infrastructure shifted and when she found out, is what I spent 35 years watching people fall into. Not a worst-case scenario, a routine case pattern. And this spring, there are tens of thousands of people in exactly that position. What I want you to understand is that Patricia is not unusually old, unusually isolated, or unusually behind. She's the median case. What changed is not her. What changed is the architecture behind the check she depends on. And what was invisible before, her lack of an online account, is now a risk with a real dollar figure attached to it. So if you are over 62 and you do not have an active online Social Security account, you have a gap in your retirement infrastructure that did not exist 2 years ago. That gap has a cost. And I'm going to tell you exactly what it is and what to do about it before it affects your payments. I'm Frank Mercer. I spent 35 years as a retirement law attorney, Social Security claims, Medicare appeals, estate disputes, benefit calculations. In 35 years of practice, I saw people arrive after something had already gone wrong. A delayed payment they couldn't explain. A benefit adjustment that got stuck in a process they didn't know existed. A form they submitted to an office that no longer handled it. In case after case, the pattern was the same. The administrative system had shifted, and the person on the other end of those benefits had no idea it had moved. Before I walk you through this, what I'm sharing is educational, based on 35 years of watching how these rule changes play out in real retirements. I'm not your attorney. Your specific situation may be different. Use this as a framework, then verify the details with a qualified professional. This is the policy change that concerned me most when I was reviewing the SSA's 2026 administrative announcements, not because the change itself is complicated, but because of how quietly it was implemented and how little direct communication went out to the people it would affect most. Let me explain what actually changed. Before April 2026, the Social Security Administration maintained a fully accessible in-person service network. If you needed to change your direct deposit information, you could call, mail a form, or walk into a field office. If you had a pending appeal, you could track it in person. If you needed proof of your benefit amount for a landlord or a lender, someone at a local office would print it for you. That system was imperfect. The wait times were already a known problem. But it was accessible to everyone, including people without internet access, people in rural areas, and people who simply are not comfortable managing government accounts online. Starting April 2026, that access model changed in a way that has not been clearly communicated to beneficiaries. The SSA, operating under a DOGE-affiliated efficiency mandate directed at reducing the federal office footprint, began closing field offices at an accelerated rate and shifting the primary service channel to the online portal. The budget numbers behind this are significant. The efficiency mandate targeted roughly $1.3 billion in SSA administrative costs, and the field office network, which costs the agency roughly $500 million annually to operate across more than 1,200 locations, became the primary target. The Congressional Budget Office had flagged the SSA's footprint as administratively redundant for years. DOGE operationalized that analysis. The closures weren't random. They were clustered in areas where population density was deemed insufficient to justify a physical office. The problem is that insufficient density consistently translates to rural counties, small towns, and communities with older-than-average populations, the people least likely to have reliable broadband, the people most likely to need in-person service. There was congressional pushback. Senators from states with large rural populations, including the Southeast and Mountain West, sent formal objections to SSA Commissioner Martine O'Malley's office in early 2026. Some demanded a 90-day delay in closures. The SSA's response acknowledged the concerns but proceeded with the mandate timeline. As of early April, 33 offices had closed with additional reviews pending. The agency announced the transition publicly, press releases, website notices, congressional responses, but there was no direct mail campaign to existing beneficiaries explaining what the change meant for them, what they needed to do, or what would happen if they didn't act. The SSA doesn't advertise this. They're not required to. And in 35 years, I watched that silence cost people more than any single rule change ever did. What I want to be precise about is the legal mechanism here. When the SSA says a service has moved online, that is not a preference. It is a procedural gatekeeping decision. The SSA does not need your permission to change its internal operating procedures. It does not need to send you a certified letter. It publishes the change in administrative bulletins on its website, in responses to congressional inquiries, and then the new rule is in effect. For people who are not reading SSA administrative bulletins, or BUMPM, which is virtually everyone, the change exists in a fog of official availability. The rule is there. It is public. It's just not in a place anyone would think to look for it until they already needed something, which in 35 years I never found to be an accident. That structural pattern has been true of every major SSA shift in the last 3 decades. The April 2026 change is no different, just larger in scope and faster in execution. What the new requirement means operationally is this: if you need to make any change to your Social Security account, your banking information, your mailing address, your tax withholding elections, the primary mechanism is now the online portal. The SSA implemented identity verification requirements that, in most cases, can only be satisfied online through its third-party identity service. For many people, that is a manageable adjustment. For a significant portion of the 55-75 population, people in rural areas with limited broadband, people with visual or cognitive limitations, people who simply never had to set up a digital government account before, it is a genuine barrier. Let me explain how the verification process actually works, because the failure points matter. When you go to create or access your online Social Security account, you're redirected to the SSA's Identity Verification Service, a contracted third-party service that secures benefit account access. You have 2 paths. The first is self-service. You upload a photograph of a government-issued ID and take a selfie. The system's facial recognition software compares the two. This works for most people, but fails at a meaningful rate for individuals over 70. Poor lighting on the photo, an expired ID whose image no longer matches after significant weight change or medical treatment, a camera quality issue on an older phone. When it fails, the system flags you for a live video call with a staff reviewer. That appointment, as of early 2026, was running 3 to 5 business days out. The second path, uploading documents without facial recognition, is technically available but less commonly offered and extends the timeline further. Even in the best case, identity verification for a new account takes 24 to 48 hours. In the failure case, it takes close to a week. If your payment is pending in 3 days, you have a problem. Two-factor authentication adds another layer. The service sends a code to your phone or email every time you log in from a new device. That is a genuine obstacle for someone with a landline and no smartphone, or for someone whose email address was set up by their adult children years ago and they no longer have access to. The verification process assumes a smartphone with camera, a working personal email, and broadband. In rural America, that combination is not universal. The SSA's accommodation path for people who cannot complete the process online adds time. It does not reduce it. The SSA does maintain accommodations for people with documented accessibility needs, but the burden is now on the beneficiary to demonstrate that need. You call the SSA, state your accessibility barrier, request an accommodation case number, and that case number authorizes an alternative verification path. In 35 years of practice, I saw people try to navigate accommodation processes under time pressure, and it consistently took longer than the standard process they were trying to avoid. The accommodation exists. It is not a fast lane. It is a slower lane with additional paperwork the system never told you you'd need to fill out. Who does this affect? Anyone over 62 who receives or expects to receive Social Security benefits and does not have an active online account. According to SSA data, as of early 2026, roughly 30% of recipients had not yet created one. That's approximately 20 million people. The groups most exposed are worth naming clearly: people approaching 65 who have not yet enrolled in Medicare. The enrollment process is now primarily online, and delays in establishing your account directly translate to complications in Medicare enrollment timelines. People with pending benefit adjustments or appeals. If your case is in process and you don't have online access, tracking it and responding to SSA requests in real time becomes significantly harder. People who need to update direct deposit information. This is the category that causes the most immediate financial disruption because a direct deposit to a closed or incorrect account does not bounce back instantly. The SSA typically allows 1 or 2 failed payment cycles before triggering a manual review, and manual reviews under the current staffing model are slow. Weeks slow in documented cases from early 2026. I should also address something that does not get enough coverage in the general guidance around this rule change: the distinction between retirement beneficiaries and Social Security disability recipients. SSDI, Social Security Disability Insurance, operates on a different track from retirement benefits, and the April 2026 changes affect both populations, but the practical consequences differ. For retirement beneficiaries, the primary risk is payment delays tied to account management issues, the direct deposit and address update scenarios I've described. For SSDI recipients, the stakes are compounded. Disability reviews, the periodic, continuing disability reviews the SSA uses to confirm ongoing eligibility, now have a stronger online component. And then there is the worst-case scenario, the one I want you to hold in mind. If you are on SSDI and you miss a request for documentation that came through the online portal rather than physical mail, you don't face a delay, you face a stop, a cessation of benefits pending a full review. In 35 years of practice, I never saw anyone easily recover from an unnoticed SSDI cessation notice. The reinstatement process is slow, documentation heavy, and unforgiving about timelines. That is not an edge case. That is the consequence at the end of the line for people who didn't know the line had moved. SSDI recipients specifically need to confirm they have an active online account and that their preferred contact method for SSA communications is correctly set in the portal. I should also address something that does not get discussed enough: the spouse who handles everything. In a marriage where one partner has always managed the finances, set up the accounts, handled the correspondence, dealt with the government forms, the other partner is often completely unaware of where things stand. That spouse may be receiving Social Security benefits in their own name tied to an account setup they've never touched. If the managing spouse has health issues or passes away, the surviving spouse faces an urgent need to access, verify, and potentially update benefit information, with no login, no password, no account of their own. I've seen this produce genuine financial emergencies. The Social Security payment may be the only income source for that surviving spouse, and a 3 to 6 week delay in resolving the access problem affects rent. It affects medications. It affects every fixed expense of that person's daily life. Both spouses need to know how to access their account independently. That is not a nice to have. It is a retirement infrastructure requirement. Wait, I want to be precise about something because I've watched this specific pattern play out more times than I can count. The people who get caught by these transitions are not people who are completely offline. They're often people who figured they'd handle it by phone or in person when the moment arrived, and didn't know the moment had already changed. Particularly vulnerable are the oldest beneficiaries, those 75 and older who may have relied entirely on in-person service since they started collecting, and rural Americans, where the nearest remaining SSA field office may now be 2 hours away. The SSA hasn't issued completely final guidance on exactly which transactions still carry phone accommodations. The dominant interpretation, based on SSA announcements through early April 2026, is that direct deposit changes and identity re-verification are now primarily online functions. But the application has been uneven across field offices, and that unevenness is itself a risk, because what an office honoured last month, it may not honour today. And there is a geographic dimension worth understanding. In states where field offices remain open and relatively well-staffed, primarily urban centres in the Northeast and West Coast, the practical impact of the April 2026 changes is softer. A beneficiary who can physically walk into a Manhattan or Los Angeles SSA office still has some in-person options, at least for now. In states like Mississippi, West Virginia, Montana, and Wyoming, where closures were concentrated and broadband penetration is below the national average, the shift to online-only service is not a policy preference. It is the only option. The gap between the stated policy and the actual delivery infrastructure is widest precisely where the most vulnerable beneficiaries live. The system didn't just change the rules, it changed the rules for the people least equipped to adapt to them and called it efficiency. Let me explain what to do now. Let me explain it the way I'd explain it to a client. The first step is the most important. Create or verify your online Social Security account. Go to the Social Security website and find the My Social Security sign-in. You will need a valid email address, your Social Security number, and you will be directed through the Identity Verification Service, which requires either a smartphone with camera capability for facial recognition or a government-issued ID you can photograph. Set up that account this week, not the week you need to use it. Verification can take 24 to 48 hours to clear, and if you're trying to prevent a missed payment, you cannot afford to be doing account setup simultaneously. When you go through the verification service, pay attention to specific error messages if the process stalls. The most common failure points are a photo of your ID that is too dark or blurry. Take it on a flat, well-lit surface, not in your hand. A selfie taken at an angle rather than straight on, and a name discrepancy between your ID and your Social Security record, which can happen with name changes from marriage or divorce. If the system flags your submission for manual review, you'll receive an email with a link to schedule a video verification call. Do not ignore that email. The link expires. Schedule the call the same day you receive it, even if you can't take the first available slot. The scheduling window closes faster than you'd expect. If your account still shows as unverified after 48 hours, call the SSA and reference your verification confirmation number. That number is your documentation of a technical failure. It establishes the problem is on the SSA's end, not yours, which matters if you need to escalate. Once your account is active, verify your direct deposit information. Log in and confirm that the bank account on file is current. If you changed banks at any point in the last 12 months, update it now. A payment routed to a closed account creates a delay cycle that, under current SSA processing times, can take 3 to 6 weeks to resolve. 3 to 6 weeks without your payment. The mechanism: when a direct deposit fails, the funds don't return to the SSA instantaneously. The ACH network has a return cycle of 2 to 3 business days. The SSA then opens a manual review case, assigns it to a processor, and works it in queue. The queue, as of early 2026, is long. If you manage your income week to week, and a significant percentage of Social Security recipients do, that gap is not recoverable without outside help. The third step is to download your benefit verification letter. Your online account generates this document instantly. It shows your current monthly benefit amount and is the standard document landlords, lenders, and government assistance programs use as proof of Social Security income. In the old system, you could call or visit and have it printed on the spot. That is no longer reliable at most locations. Download it, save it, keep a printed copy somewhere accessible. The document you want is the Benefit Verification Letter, sometimes called the Proof of Income Letter, which is different from your annual COLA notice and different from your SSA 1099 tax form. On the portal, it is found under Get a Benefit Verification Letter in the main menu. Most agencies and landlords require it dated within the last 30 to 90 days, so generate it fresh when you need it. The fourth step applies to anyone who is 64 or within 12 months of turning 65. Do not wait for a field office appointment to enroll in Medicare. The SSA's own guidance is to enroll online beginning 3 months before your 65th birthday. The enrollment window opens 3 months before your birthday month and closes 3 months after. Miss it, and the late enrollment penalties are permanent. The Part B penalty is 10% of the standard premium for every 12-month period you were eligible but did not enroll, permanently added to your premium for life. A 2-year delay in enrollment can add over $40 per month to your Part B premium forever. Given current field office capacity and reported wait times, planning around an in-person appointment is a risk I would not take. There is a fifth step that applies to a specific population, and I want to address it directly because it does not appear in most of the general guidance going around. If you are managing benefits on behalf of an elderly parent, a spouse with cognitive decline, or another family member, as a representative payee or through a power of attorney arrangement, the April 2026 changes create a specific complication for you. A representative payee account is distinct from a personal online Social Security account. The online management of a representative payee arrangement requires its own access pathway on the portal with its own verification requirements. If you've been managing this by phone or in person, verify that your representative payee access is current in the online system, separately from your own account. If you cannot access the representative payee portal, your escalation path is your congressional representative's district office. A Congressional Constituent Services Office has a dedicated SSA liaison who can flag stalled cases and accommodation requests directly. It typically moves a case faster than any SSA phone line. The number is on your representative's official website under Services or Constituent Help. In 35 years of practice, I saw this cost people everything. Not the rule change itself, but the assumption that the old system would still be there when they needed it. The SSA transitioned its service delivery model in April 2026. Field offices are closing. The phone system is overloaded. The primary channel for account management is now online, and the identity verification requirements attached to it are stricter than anything the SSA previously maintained. If you have an active online Social Security account, your direct deposit is verified, and your benefit documentation is current, you are significantly better protected than most people who will be affected by this change. If you're missing any of those elements, the time to address it is before you need it, not after. What I keep coming back to is how familiar the structure of this transition is. The SSA has reorganized its delivery model before, in the late 1990s shifting to online forms, in the mid-2000s consolidating phone lines. Each time the change was announced publicly, each time the announcement reached the people already paying close attention. Policy watchers, financial advisors, attorneys like me. Each time, the people who most needed to hear it found out only after they had been caught. The 2026 transition is larger and faster than any prior shift. But the structural pattern is identical. The rule exists. It's public. But it's buried. You have time. You have a framework. And now you know where to look. I'm Frank Mercer. Keep asking the right questions. If this was useful, subscribing takes 1 second, and it means the next time a rule like this changes, you'll hear about it before the deadline, not after.